Hello, everybody. Welcome to MarketClub Skype. We're actually going to be interviewing Brian Booth today, who's with Longleaf Trading. Brian is kind enough to provide the gold chart for us every week on the I Know blog. And without further ado, let's meet Brian. Brian, are you there?
I'm here.
Hey, good to see you, Brian. Thanks for joining us today. It's always fun to talk to other traders, and of course, you've had an interesting history with in the trading industry, and you're in one of my favorite buildings in Chicago, the Monadnock building. I can never say it, but I love the building. Anyway, Brian, tell me, how did you get involved in the trading business?
Prior to trading in the futures market, I was actually in the insurance business. I sold life insurance and disability insurance, and once you get in touch with the higher net worth clients, I actually took interest in more of the the financial aspect of long-term planning and things along those lines. It just sort of progressed over the years from stock trading, and then eventually made my way into the futures world and trading commodities, and I've been here ever since.
What a fascinating way. It's interesting how different people get into the industry, and but yours is pretty interesting to go from an insurance into futures, or stocks into futures. Futures are really, I think, probably the greatest misnomer about futures, the fact that people think you're going to take delivery of something like cattle or whatever it is, or gold on your front doorstep, and the reality is it's just what's the percentage, Brian, of the people that actually take delivery of?
The rumor is it's somewhere around 5%.
Yeah.
I'm not sure if that's the correct number for every single one of the futures markets, but generally the rule of thumb is somewhere around 5%. So it leaves 95% of that. The remainder of the market is speculators. So it's a pretty big difference, right?
And I think speculators also have got a very bad rap. Basically, their rap is they drive prices up, but they also drive prices down as well, as you well know. But tell us, while we have a few minutes together, Brian, what is your trading style? What markets do you like to trade, or what do you follow more?
I'd have to say, if you wanted me to dissect my trading style, I'd say it's ever changing because. The markets are liquid enough to provide great opportunities for just about any investor, whether you're a long-term trader or a short-term trader or intermediate trader as well. With a Series 3 license as a broker from where I sit, each trader is going to have a different agenda and a different idea with the markets. What I try to do when I'm working with, my customers is to find out what their style is like, what their risk tolerance is like, what markets they have their eye on. So, I lean towards, basing trades off of each individual customer. But I would have to say that, with the environment that we're currently in, you're either committing to a long-term idea in these markets, waiting, being patient for the market to pull back or rally to a spot that you'd be looking to execute your trade, knowing your risk in advance, or committing to a shorter-term kind of an intraday or swing trade. Just because the markets have been so volatile, like you saw in today's market. We've changed directions several times throughout the day, so you have to adjust and adapt based on what the market is giving us as far as technical and fundamental analysis.
Yes, absolutely. And as you said, they're being very volatile. I'm not going to put you on the spot and ask you what you think of gold, because that would be unfair for someone who's watching this a month from now or whatever it might be. But would you say you lean more to the technical side or the fundamental side, or is it a combination?
Well, it has to be a combination of the two. If you look at it over the last 10 plus years, investing in the gold market, to the buying gold has always produced some sort of a return. It might just be a few percentage points here and there, but it continues to be on an upward trend. So fundamentally, especially now that the Fed continues their campaign with devaluing the U.S. dollar, the long side seems like the place to be. But we're going to have some emotional days like what we saw in today's market. It just shows you today, ahead of first notice date for the December futures, how finicky the market can be. I was caught by surprise actually today that the market made as significant of a drop as it did. But it's days like today where you may take a look at today's drop and say a lot of the smaller hands or the weaker hands in the market would be shaken and afraid to step back in and buy the market. But I look at a drop like today down to close to 1,700 in the front month futures as an opportunity to start scaling back into the market or initiating your first position out into February a little bit further out. The technical analysis is definitely where it's at, because if you look, once a rally or a sell-off has met its final spot, you can always, there's something that you'll figure it out if you look at a daily chart or an intraday chart that shows you why the market stopped where it did, or why the selling or the buying ran out.
Well, one of my favorite tools is, I agree with you totally, one of my favorite tools, it was a surprise today, by the way, with the gold. I don't think anybody, first noticed that, I don't think anybody expected to see a $35 drop in gold in a matter of literally minutes. But one of my favorite tools, Brian, and maybe you use this tool, and if you do, maybe you could explain a little bit to us, and that's the Fibonacci tool. Do you use Fibonacci at all?
Yeah, very frequently, actually. A lot of the very sharp sell-offs or the strong rallies, you'll see that they do tend to target Fibonacci retracements. Does it work on a day-to-day basis? Not every day, but if you use that as kind of a general rule of thumb for entry and exit, a lot of the markets have been following Fibonacci pretty closely. Yes. Yeah,
I'm always amazed at it. It's like, how does the market know? But I guess enough traders look at those things, and it does make a difference. And if you wait to make those turns, it's very, very interesting. But a couple things I want to ask you. What did you? I have a really bad trade. I have a trade I remember since 1972. That's how long ago I was trading. But my trade was a wheat trade, and it was a disaster for me at the time. But it was my best lesson I ever learned about trading. What's your worst trade you've had so far? Would you say?
I would have to say that probably the worst trade is one that you had right and you didn't take your own advice, or you couldn't get a customer to take the advice. And one trade in particular that stands out. I have a lot of metal bulls in my book of business. And since the rally, say in the silver market up to 50 before the margin requirements were raised to $26,000 plus, you saw how much damage that had on the market, or influence it had on the market, because we've been in a much slower trade than what we were in back in those days when quantitative easing 1 and 2 were on the board and very influential in the market. One of the things that I kept recommending to a lot of customers was to maintain your long position in the futures if you could hold it, or buy the futures on a dip. But if the target was to sell out of the position at a specific spot on the way back up, to sell out of the money calls and collect the premium against your long futures position. And if you look at some of the highs along the way, every time that we roll from, say, December into February, there are specific chart highs that the silver will get to and usually fail and go back into the range trading. If you sell those out of the money calls against your futures positions, if the premium warrants it, it helps you lower your margin requirement, but it's been almost a free trade. You just have to wait until the market's a little bit closer and sell that call against your future. So that's difficult to convince traders to do, because I think most expect that we're going to have this really strong recovery in the metals, which may happen. I tend to think it's going to be more of a gradual rally than what we saw a few years ago.
Well, it's interesting you're using options with your positions. Do you use that quite often, Brian?
When it's the right time. It's a lot of retail traders are they're very used to the simple trade, which is buy a future with a stop and use a limit order to collect your gains and adjust the position. When you start to mix in short options against your position, or long options against a future, sometimes it tends to muddy the waters a little bit, but it's a lot more simple than most think. And the silver, with the way it's behaved so far, I think everyone is bullish silver. Just a little skittish about getting involved because of the high margin requirement. But if you look at a long future versus selling out of the money calls on spots on the chart that you probably would have trimmed some of the fat off on your futures anyway, it's been a great trade. It's just and it's worked out month after month on the rolls. It takes a specific trader to actually step in and execute an order like that.
Absolutely. Well, the metals certainly are looking very good in longer term technically, and as you say, it could be Q1 of 13 where we see some really upside momentum. It depends, but there's just so many opportunities. How would you find your trades, Brian? What do you look for?
How would I find them?
Yeah, I mean, how would you? Let's say you come up with. How would you find an idea to talk to your customer book about?
Normally this is what I do. I look at a market from a fundamental standpoint first and foremost. And most times what I do is, maintain that idea and look for the best opportunity. In this market, especially for the retail investor, patience it can be your biggest virtue. Taking a look at some of the markets, like take, for example, crude oil. The news out of the Middle East most recently a few years ago would have driven this market up $5-6 in a day and a half. And really all we saw was just a, kind of a technical bounce followed by a pullback in what we saw in today's market. We all know that supply and demand are factored in. There's a lot of things that drive the crude oil market. But all it takes is one little bit of news to really, run this market up to catch up to markets like the gold and silver. If we get continued movement in the Middle East, where stories are coming that there's continued riots and rallies and all the things, violence, so on and so forth. I use those ideas, knowing what I've seen in the past, to keep a fundamental bias, but then I wait for the right opportunities technically to step into the market.
That's a good strategy. Brian, we're going to wrap it up pretty soon here, but how important would you say discipline is in trading? It is
100% probably the most important thing, especially in this market. And as you come into the end of the year, with all the things we have in front of us here, with the fiscal cliff announcements, you saw how much just one storyline can change the direction of the market for a day or two. Sticking to an overall idea, having technical analysis in mind and spots on the chart where you would say, okay, if it gets to this spot, this is where I would look to offset and take my gains on the position. The traders that I think are making the money the most here, as far as from a retail standpoint, are the ones that say, here's where I would execute my trade, long or short. Here's where my risk would be identified, and here's when the market, if it got to this spot, I would either adjust my trade by moving my stop, or just go ahead and liquidate the position and take my gains and wait for the next opportunity. So it's of the utmost importance at this point with where we are in the market today.
Brian, listen, it's been a joy and a pleasure talking to you. And we're here today with Brian from Longleaf Trading and Brian Booth. And if you want to watch the whole interview, just feel free to watch it. But I'm Adam Hewison. Brian, thank you once again. We'll be seeing you soon. We'll do some interviews in the new year, and you can tell us about your thoughts on the markets in the new year. So every success. Thanks for joining us.
Very good. Thank you, Adam. I appreciate it.